There's so many individuals, gurus online on the internet that try to tell you that you can do this with just technical analysis. That is false. Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, I'm going to show you all step by step the process that it took for us to be able to call out the absolute bottom on Gbpjpy's most recent move, calling over 200 pips in advance to the private CYPRX community. Showing you all that the devil's in the details, that any normal person with the independent ability to think for themselves and see outside of the market drama and manipulation and all of the influencer guru bullcrap on the internet is able to do this yourself if you tap in. So if you enjoy these video breakdowns and you actually learn something of value, smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support. So for all of you individuals listening on the Zoom call recording, what have we been talking about over the past couple of days? It's extremely important for you to understand this information to gauge how we were able to call out the absolute bottom on this move. Aside from technical analysis, aside from the deltas, understanding these fundamentals piece by piece and how they impact the price of whatever currency pair or asset class you are trading. So I said to you guys on the X Space, and I sent this in the private CYPRX community, successful trading requires more than just time in the market. It demands a commitment to continuous learning and a deep dive into the essentials like market fundamentals, critical thinking, central banks, and macroeconomics, okay? You're not going to become successful in these markets simply by just backtesting some magic strategy, okay? You have to understand how complex these markets are, and if you don't, they will destroy you financially, all right? So over the past, let's just say, year and a half that we've been making and recording video breakdowns on Gbpjpy ever since I started really paying attention to teaching you guys fundamentals within inside the private CYPRX community and open up that part of my life and that trading aspect that I take via the approach and the top-down analysis that I take when I come into the market, okay? We've been talking about how overall higher time frame, zooming out, macro perspective, the Bank of England has been hawkish with a tight monetary policy stance, and the Bank of Japan has been dovish overall, maintaining an ultra-loose monetary policy stance. That divergence in the market still exists. And so what have I been telling you guys over the past couple of months is that we need to continuously play these higher time frame pullbacks due to these little tiny fundamental breakdowns that cause pullbacks on Gbpjpy, which we're going to go over today, to resituate ourselves to look for higher time frame buying opportunities for the market to reverse bullish again and to capitalize on these buying opportunities from discounted areas, okay? So I sent you guys this overall PDF breaking down and explaining to you all what hawkish sentiment is versus dovish sentiment and what either positive or negative effect it has on that said currency pair. So just a real quick breakdown and refresher. What is a hawkish comment? A hawkish comment from a central bank typically implies a stance or a statement that suggests a more aggressive approach to monetary policy, particularly in the context of controlling inflation. Hawkish comments convey a willingness to tighten monetary policy, often by raising rates or adopting other measures to cool down an overheated economy. And I gave you guys what to expect. Why do hawkish comments usually drive strength for that domestic currency and what to be paying attention to? Vice versa, gave you guys the same thing from a dovish perspective, okay? Explaining to you all in detail what a dovish comment is, what type of sentiment it brings to the market, right? So overall, a dovish comment from central bankers refers to a more accommodative or lenient stance toward monetary policy. Dovish comments suggest a willingness to support economic growth and employment, even at the expense of allowing for higher inflation, right? And then gave you guys some reactive measures to be paying attention to, some fundamental vocab words that could positively or negatively impact the price of whatever domestic currency pair you're trading, okay? So understanding this is extremely imperative to understanding why Gbpjpy did what it did pretty much over the past 2 weeks, okay? So we're going to jump into this in extreme detail. So let's just cover real fast why this pullback move happened on Gbpjpy last week. It was primarily due to the hawkish comments that came out from Governor Ueda and Bank of Japan representatives. which overall gave temporary, remember, key vocabulary, temporary strength to the yen, which weighed on the Great British Pound. But overall, higher time frame, when you zoom out, what have I been telling you guys? If you go to the 4-hour and the 8-hour or anything above that, you can zoom out and you can see that GBP/JPY has been bullish. This is primarily due to the divergence between central bankers, where the Bank of England, again, has maintained a tight monetary policy stance, and vice versa, the Bank of Japan has maintained an ultra-loose monetary policy stance. So to sum this all up, what took place last week was the market makers were finding a stable price to push GBP/JPY down into in the form of higher time frame discount to look for better buying areas to continue the overall macro trend, which we have seen play out this week. And we're going to get into that. So last week, starting roughly, I believe, on Tuesday, January 23rd, we saw this fundamental article come out. After the Bank of Japan decided to maintain the policy settings and forward guidance unchanged at the January policy meeting, Bank of Japan Governor Kuwait, I'm just going to call him Ueda, stated that the likelihood of achieving the 2% inflation target is rising gradually. This is seen as a more hawkish comment, okay? He further added that the central bank must continue to monitor financial and foreign exchange markets and their impact on prices and the overall economy. So that was the first kind of hawkish sentiment or the hawkish tilt that started last week that started to weigh on the Great British Pound up against the Japanese yen and give yen more strength up against GBP, okay? Following that, we saw some further comments where you can see here, this is from January 30th, where if we look at the time frame in comparison to where price action was, generally speaking, in this area, right? Bank of Japan hawkish tilt in January, debated stimulus exit scenario summary, right? So there's that little tiny headline right there. Following that, we also saw these little tiny comments come out. Some analysts saw the hawkish tone of summary as a sign that the Bank of Japan could end negative rates at its next meeting in March. It appears as if the countdown toward policy shift has begun, says Japan's chief economist at BNP Paribas. The balance of views within the board has tilted quite clearly toward an early policy shift. So remember, if the Bank of Japan has been in an ultra-loose monetary policy stance and some chief economist from, the BOJ comes out and starts tilting at a more hawkish tone, what is that going to temporarily do? The algorithms are going to start to price that in. The yen's going to start to gain strength based off the comments, and we're going to see a decline in the value of the Great British Pound up against the Japanese yen because the yen is temporarily gaining strength based off the temporary hawkish comments. But what we need to understand overall is that the divergence has not shifted yet. The Bank of Japan has not confirmed that they're exiting their monetary policy stance, and vice versa, the Bank of England has not confirmed that they're exiting their tight monetary policy stance. We can still see the Bank of England trying and attempting to bring down inflation, battling inflation, bringing it down to their 2% goal, and they have stated that until that happens, they're not going to exit or tweak their monetary policy stance, right? So understanding this information and understanding that this was all a temporary move to come back down into discount, now let's resituate ourselves on more current price action. Here at the exact bottom, significantly enough, at the same exact time that price came down into a discounted area, this is where we're going to start to throw in technical analysis as to how we were able to call in the absolute bottom of this move. And I'm going to show you how in the Discord we were able to do that, okay? You can see right here, this is a screenshot from a fundamental piece that came out on, I believe it was Thursday, February 1st, where the Bank of England, yep, it was Thursday, February 1st, the Bank of England held the official bank rate at 5.25%, with Catherine Main and Jonathan Haskell being the only two hawks favoring a 25 basis point hike. This is more hawkish than expected, as general thinking was that the three hawks that voted in December would relent. Moreover, the statement indicated that the central bank was still concerned over the persistence of inflation, with the forecast for inflation pushing back against expectations for an early rate cut. The statement read that monetary policy needs to be restricted for an extended period of time until the risk of inflation becomes embedded above the 2% target dissipates. So this was just confirmation of the overall macro higher time frame bias, which is that the Central Bank of England, or the Bank of England, needs to maintain its monetary policy stance to battle and tame inflation to bring it down to 2%, which is their overall goal, right? And that is exactly why we saw the significant increase in the Great British Pound and strength persist in the GBP-JPY pair. So I wrote down here for you guys. Overall, the Bank of England still in a hawkish tone, keeping their tight monetary policy stance. Bank of Japan, inversely, still needing to keep its loose monetary policy stance. So I wrote down this little tiny key highlight. Facts outweigh temporary comments. When we're seeing sell pressure on GBP-JPY, you need to understand why this is happening and what's going to cause it to fade out. Confirmation that the Bank of England is going to keep and maintain its tight monetary policy stance against the Bank of Japan maintaining its ultra loose monetary policy stance is going to continue that divergence play, drive strength back to the Great British Pound, and weaken the yen. Moving forward into the following week, okay? As we ended last week, Friday, February, I believe it was, let's see, look down at the bottom of the charts, February 1st into the 2nd, okay? We had this highlight come out where it read, the Bank of Japan is set to delay the policy rate normalization. Yep, it came out Sunday as we rolled over into the new week on the 4th of February, right? So right before this week started. So what does that mean? Again, no tweaking in monetary policy. They're going to maintain their ultra loose monetary policy stance, and rate normalization was delayed. So remember, previous comments were that we are expecting some potential shift or hawkish tilt as a potential shift in March. That was delayed to, I believe, April or May of now this year. So everything has now been pushed back. Confirmation has been sent out via the lower inflation readings from Tokyo CPI data that came out the previous week, signals that overall Japan and the Bank of Japan is going to have to maintain its ultra loose monetary policy stance. And that was confirmed on Sunday with this headline right here, okay? So think about where we're at in price action and why we were able to call out this move. Now let's start to gather our thoughts around technical analysis as we start to read these fundamental breakdowns. Keeping in mind what I told you guys, in order to do this, you need to have an understanding of central banks, monetary policy, macroeconomics, and utilize critical thinking, okay? So think about how all of this stuff is happening at the same exact time that price is coming into a higher time frame discount, at the same exact date that we're seeing the Bank of England maintain its tight monetary policy stance, keep interest rates higher for longer due to the fight on inflation, okay? And we're seeing that bullish impulsive move that breaks all previous bearish market structure that was caused due to the hawkish comments from the Bank of Japan, okay? So we're clearly seeing that the overall macro environment is holding the most weight, which is the divergence between the two central banks. So we have to continue to play those moves, right? Following that, where we started to call out this move on Tuesday, looking at this screenshot here from the CYPRX private Discord, on Tuesday, February 6th at 8:06 a.m., we said, high risk buys if we can stay above the 186 to 186.200 on a GBP JPY. And that was right here at the bottom of price action. But what happened before that? Let's look at technical analysis, okay? Layering that on to our fundamental understanding. So now up to this point, you guys have seen that the reason for this sell-off in GBP JPY was due to a hawkish tilt from the Bank of Japan comments, right? That caused sell pressure on GBP JPY, giving temporary strength to the yen. But then the overall macro higher time frame perspective and the divergence was confirmed here with the Bank of England keeping its rates higher for longer, hawkish comments from Bank of England speakers, right? Driving strength back to the Great British Pound, outweighing all of these rumors and these comments from Bank of Japan speakers that caused the sell-off to happen. Okay, you guys starting to see how I'm piecing all that together? So now looking at this price action, what I was doing, giving you guys this analysis to get the higher time frame discounted area, was I was seeing that this overall move right here, when this fundamental piece came out from the Bank of England, broke all previous bearish market structure. So looking at this previous lower high in the market here in this area, we can see that this bullish move created a new A to B move, or a new swing high in the market after violating previous lows. This to me was the start of an institutional pattern where again, confirming that banking institutions are the only people with the amount of money to move the market were buying at a discount from where they previously bought from, right? So seeing that, I was looking for a trend continuation if this price action pullback could come into a discounted area. And sure enough, having supporting fundamentals, we saw once price pulled back into this discounted area, measuring from this A down at the bottom to B move to the top of the move where price broke this previous market structure, we can see that price pulled back down into our sweet spot. Remember, we're on the 2-hour time frame into around 70% discount, or a 70% retracement from this previous bullish move, which gives us the green light to start to look for sound risk to reward ratios to trade in the direction of the higher time frame, understanding that the Bank of Japan is still keeping its ultra loose monetary policy stance, how that negatively affects the yen, and how the Bank of England maintaining its tight monetary policy stance and its hawkish comments benefits the Great British Pound or creates an increase in strength, right? Seeing how that divergence works, what did we have come out with this little tiny bullish move right here? Well, on this day, significantly enough, again, look at how the correlations work. You think that it was a coincidence that at the same exact time that price was at a 70% discount was the same exact time that S&P Global UK Services PMI came out upbeat for the UK. Now, just to show you all that we give our community information in advance via fundamental breakdowns fully before the move plays out, you can see in our private Discord where I give my full analysis on Monday, February 5th, the night before the UK PMI figures came out, we sent this overall macro breakdown. And I went on to say that if Gbpjpy is going to experience some type of bullish move, we need to see UK PMI figures come out upbeat, and that data was in focus. Down at the bottom, you can see I said, shifting our focus to Gbpjpy, the bias remains unchanged, with a preference for discounted opportunities in the low 185s to 186 range. Buyers are anticipated to re-enter aiming for levels around 188 to 189. As long as price remains above the 185, the bias on Gbpjpy is contingent on price staying above the 185 overall. So I told them that I am going to continue to be looking for buying opportunities as long as price stays above this range. And this was all sent in advance before the move played out the day before. Here you can see that this fundamental piece reads on February 5th, 2024, the strongest service sector's performance since May 2023. Key findings. January data signaled a solid increase in business activity across the UK services economy, which extended the current period of expansion to 3 months. Higher levels of output were supported by a sustained rise in new orders. Survey respondents typically commented on improved confidence among clients due to the strengthening economic conditions. So we saw upbeat PMI figures come out for the UK. Think about it. Remember I said to you guys in this tweet right here, you need critical thinking and an understanding of macroeconomics. So this is where critical thinking comes into play. It's not a coincidence that the fundamental for the interest rate continuations of the Bank of England came out when price was at a discount. Nor is it a coincidence that after this bullish move happened, breaking previous market structure that was caused by hawkish comments from the Bank of England, it is not a coincidence that price was at a discounted area when this S&P Global Services report from the UK came out either, and it came out upbeat and positive. And you can see how the market reacted to that. Now focusing on structure, understanding that this area of interest right here is already 70% discounted from this previous bullish move. Now let's go further into detail and start to drop down to the lower time frame. Why and how we were able to call out this move. Hopefully this is starting to piece it all together for you guys. Jumping down to the lower time frame, we're going to go down to the 30-minute. Okay. When this fundamental report came out, it was during the London session. The London session took place here in this area of price action. So the report came out positive for the UK, giving strength back to the Great British Pound. On the lower time frame, remember, we started on the 2-hour, and we've already determined that this whole entire area of price action is the higher time frame discount from that previous bullish move. Now we can see the same exact pattern playing out, where we're seeing lows, we're seeing violations of those lows, We're seeing previous highs where bearish price action took place, or the definition of bearish order flow. Lows, lower highs, lower lows, lower highs, lower lows, lower high formations get violated with a impulsive bullish move that breaks previous bearish market structure. So with this bullish fundamental coming out, we can see that the impulsive move on Gbpjpy broke this previous market structure, which to me signaled a new, again, same thing that we just did on the higher time frame, now on the 30-minute, create a new A to B move, right? So piecing all this information together, now let's go back to the higher time frame. Just to wrap all this up so I can show you guys how I was able to do this for you all. So far, we confirmed up to this point that these comments from the Bank of Japan were simply just rumors and comments, not facts, right? We have to take into consideration the facts. And the facts are that the Bank of Japan has got to maintain their ultra-loose monetary policy stance. Vice versa, the Bank of England up to this point is maintaining their tight monetary policy stance, which we know, given this PDF that I wrote for you guys, drives demand for said domestic currency. Inversely, a more dovish tone or loose monetary policy stance tends to weigh on that domestic currency. Okay, so this is how you piece together all of this information. Looking at how this report came out positive for the UK, driving more demand for the Great British Pound at said discounted area from the previous bullish move. All I did to gauge this move and tell you guys that we were potentially about to see a high risk buy if we can stay above 186 to 186,200 on Gbpjpy at the exact bottom of price action, was jumping back down to the 30-minute time frame. I took my Fibonacci from the low, understanding though, keeping in mind that this area is higher time frame discount, which solidified my confidence to give you guys this trade. From the low to the high, and again, we come back down into that 79% sweet spot discounted area, right? For more previous banking institutions, same thing that we just saw on the higher time frame, are the only people with the amount of money to make this pattern, which is a low, violation of that low, a shift in market structure and failure to create new lows in the market, and demand or buy orders coming back into the market that are significantly big enough to break previous bearish market structure, right? We know that institutions are the only people with the amount of money to make this pattern. At the same exact time, think about it, critical thinking, that price is in a higher time frame, 2-hour discounted area of interest. At the same exact time that we have confirmation that the Central Bank of England, the Bank of England, has to maintain its tight monetary policy stance. And at the same exact time, the day before this happened, remember, we got this fundamental piece right here. The Bank of Japan is delaying its rate normalization, right? So they're pushing their rate normalization out until like April or May. That's what the projections are taking place at. Okay. So piecing all that together for you guys, we were able in the private chat to say this to you all. We got a nice impulsive bullish move. All right. So that's where we're at in price action now. So from that bullish move, looking at the market and where it was at later on in the week, heading into Tuesday, Wednesday's price action after this previous bullish move, how are we, again, we're going to now just stay on the 30-minute time frame, able to call out more buy scenarios on Gbpjpy, where on Wednesday, February 7th at 5:34 p.m., I sent you guys some screenshots. Okay, just looking at the chat real fast so that way you can see a better image. Okay, here was scenario number 3, where we are looking for a break above the 187.150 for price to come up into the high 17s, even potentially breaking that up into the 188s. Okay, following that analysis, about 30 minutes later, that trade played out to the absolute T. Why was I again confident that this type of scenario could potentially play out? It has to do with my understanding of fundamentals and how I apply that to the higher time frame bias alongside the lower time frame price action. Okay, so now let's go over to the charts again and look at the fundamentals that came out. One of our CYPRX mentors, Emiliano, posted in the chat some dovish comments from Bank of Japan representatives. Here you can see at 5:34 p.m., the same exact time that I put the analysis out to you guys looking for buys on Gbpjpy, Emiliano in the chat said to you all, Bank of Japan Deputy Governor, I'm not going to butcher his last name, Bank of Japan to maintain a cautious approach towards rate hikes. This is seen as a dovish comment. Following that, we can see fundamental articles that came out right here. Dovish comments from the Bank of Japan Deputy Governor Uchida stating policy tightening would be gradual and that rate adjustments would not necessarily trigger tightening cycles weighed on the Japanese yen. So again, referring back to the PDF that I sent you guys, understanding how hawkish comments tend, it's not guaranteed, they tend to weigh on the strength of that domestic currency, whereas vice versa, hawkish comments tend to regain strength in that domestic currency. At the same exact time that we were seeing dovish comments from the Bank of Japan speakers, at the same exact time we were seeing hawkish confirms from Bank of England speakers. Here you can see February 7th, sterling rose on Wednesday after data showing rising house prices in Britain supported bets that the Bank of England was not likely to cut rates anytime soon. The British house prices rose to 2.5% in the year to January, the strongest annual growth rate for a year according to data from mortgage lenders Halifax. But what I want you all to pay attention to is right here. In a sign that the Bank of England is in no rush to cut interest rates, Deputy Governor Breeden said she was now thinking about how long interest rates would need to stay at their current level. That is seen as a hawkish comment. So why I was so confident in this area to give you guys this second trade analysis, having already called the bottom out of this move, looking for buy continuations, was because of my understanding of how dovish comments tend to weigh on the Japanese yen, how the sentiment overall via the ultra-loose monetary policy stance from the Bank of Japan tends to weigh on the yen, and understanding the divergence between central banks. Bank of England hawkish, tight monetary policy stance tends to give the Great British Pound strength, alongside with supporting fundamental factors that the UK economy is still somewhat or moderately healthy, right? Investors are going to seek to buy the Great British Pound and sell the yen. You can see right here, after that analysis, we broke above that 187.150 psychological level and price continued higher. So in a nutshell, right, starting from where we started breaking down price action, why we saw the sell-off was due to hawkish Bank of Japan comments, temporarily given strength to the yen, weighing on the Great British Pound. Once price came into, let's go back to the higher time frame so this doesn't look too janky. Once price came down into a higher time frame discount, significantly enough was the same exact date that we had the interest rate decision from the Bank of England, where they maintained rates higher for longer, and a whole bunch of hawkish comments came out from the Bank of England speakers, driving demand back for the Great British Pound. Leading up to the analysis that I gave you guys, we were able to interpret all of that information, price all that in, and do some simple technical analysis by understanding that this pattern right here, lows created in the market, violations of the lows, price action appreciation that breaks previous bearish market structure highs, banks are the only people with the amount of money to do this. Retail cannot do this. So piecing all that together, we now understand who is in control of the market. Banks are buying up the Great British Pound, selling yen, pushing price down into discount, using fundamentals to do so to continue the higher time frame trend. Significantly enough, in this area, the day before we were in a discounted environment from this previous bullish move, we had confirms that the Bank of Japan was going to delay policy rate normalization, which confirms the overall bias and direction of this pair and the direction that it's most likely going to trade in, right? In this area, we had the S&P Global UK Services PMI come out upbeat, which caused this little tiny uptick in GBP pairs, breaking previous bearish market structure, confirming that banks were interested in this discounted area from this previous bullish move, which we showed you was about 70% discount. Scaling down to the lower time frame, we then, confirming that we were in a 70% discount, drew our Fibonacci from this low to this high, and confirmed again on the lower time frame that we were yet again at a discounted area of interest. Sending that analysis to the CYPRX students ahead of the curve, we said high risk buy scenarios on Gbpjpy if price can hold above 186.200. Sure enough, we saw an appreciation of the Great British Pound, everything coming into fruition, a nice little impulsive move. Following the next day, just to confirm the analysis and buy continuations, sending that out to the students in advance, we saw Bank of Japan continue dovish comments, keeping their monetary policy stance loose. Vice versa, we saw an improved risk on market mood and hawkish comments from the Bank of England, right? So this is how overall we were able to call out over 200 pips on GBPJPY in advance simply by understanding macroeconomics, sound technical analysis, piecing that all together from a logical perspective and not fighting the market. Okay, that's one thing I want you guys to take away. You have to understand that you cannot move these markets, nor can you attempt to battle or fight the directional bias of the market. If you don't know how to move in tandem with the flow, don't swim in the river. If you're going to jump in a river and attempt to swim the opposite direction, you're going to get annihilated. You're probably going to drown. It's the same thing with the market. So hopefully this video breakdown just showed you all how we were able piece by piece and step by step to gauge this overall move on GBPJPY that yielded over 200 pips. There's so many individuals, gurus online on the internet that try to tell you that you can do this with just technical analysis. That is false. Order blocks, smart money concepts, retail trading concepts are not going to save you in this market. You need to understand these fundamentals and you need to understand why price action is going from A to B. Now, obviously, of course, we're not going to sit here and say or even think that we can sit here and know it all because we can't. But just by simply understanding these sound principles in the market, we were able to gauge that price was at a discount, when the market came out with fundamentals, how price reacted to that, do some simple technical analysis, be patient and wait for discounted prices, do some more technical analysis and compilation with some more fundamentals, and then take the risk. Now you can see how that played out. Absolutely phenomenal call outs in the private CYPRX community this week, yet again. And this isn't even going down the rabbit hole of all the crypto technical analysis and other technical analysis that we provide on other asset classes.